Hey everybody, this is Jaime.Phillips with the Johnson Group by EXP here in beautiful Richmond Hill outside of the Savannah area. I'm not trying to sound repetitive, but there's some of you that this is the first time in the channel, so that way you get an idea where we are. So I like to bring good information for you guys and your, especially when it refers to your real estate needs and things that you can use, not just in buying a home, but how to deal with mortgage and stuff like that. So today I want to talk to you guys about what it takes to refinance your home. So for that, obviously I'm not a lender, I'm a realtor. So I don't want to tell you things that are wrong. So I always bring you the expert. And today we have with us one of my most favorite people in the industry. She's amazing. She's got a fountain of knowledge here. And I'm going to let her introduce herself.
Hey, Jessica Ochoa with Fairway Independent Mortgage, also right here in Richmond Hill. Local lender, been doing mortgages for a long time, so happy to help with the video.
All right, cool. So Jessica, when it comes to refinancing a home, let's picture that there's people that never done it, that they're just thinking about it. So what does refinancing mean?
So refinancing, the short version of it, is basically taking the mortgage that you already have on a home that you own and redoing that mortgage in some form or fashion. So we can, usually the majority of the reason somebody refinances is to get a lower rate. So if you get a lower rate on your mortgage, you can add money to your mortgage, take money away, you can add length of term, you can take term away. So it's just any kind of redo of the original mortgage.
Okay, and who can refinance? Who can do it?
So anybody that owns a home with a mortgage on there should be able to do a refinance. There are some specifics that we look at for each refinance option. For the most part, we do look at your credit again and your income again to make sure that you can qualify for the new terms of the mortgage. Especially if you're adding a borrower, taking borrower away, some of those types of things, then we do need to look at those specifics. There are some loan programs that don't require us to look at income again or credit again. We just sometimes just look at the mortgage history that's been made on that current mortgage.
Okay, so in this example, let's say somebody buys a house and shortly after the interest rates drop back to 2%. Yeah, it's not happening.
It has happened.
Yeah, one time. But let's say that it happened. And how long does that person has to wait before he can refinance?
So typically you have to make at least 6 regular payments before you're eligible to do a refinance again. Certain loan programs do require a little bit longer. So if you're doing a VA interest rate reduction loan, then they do require that you make it be 210 days past the original first payment date, which equals out to about 7 months. But usually, somewhere after 6 months after that first regular payment is scheduled to be made.
Okay, so this happened to me in particular. I wanted to refinance and this is in real life, when the rates actually went down that low. And at the time, the very time that I wanted to do it, my lender said that it probably wasn't going to be beneficial for me to do it. And he went on to explain why. I'm not going to get on the details of that because I want you to tell us a little bit about what exactly is the most beneficial time to do such a thing.
Okay. Yeah. So, and again, it's case by case scenario, and then, that's what we look at as lenders. That's what I try to advise everybody. Like, let's do the best thing for you. Generally speaking, you kind of hear like you want it to be 0.5% to a whole percent lower than what you're already paying now, as far as like your goal is just to save money on your payments. You have costs that are always involved with a refinance in some form of fashion. In the state of Georgia, you have to go through an attorney and have a closing, that kind of thing, in some form of fashion. So there's different costs for the refinances. So basically what we want to see is that your savings on the refinance is going to make up for the cost for that refinance. And it varies for every different loan, depends on loan type, the loan amount that's owed, the interest rates. Like, there's a lot of different factors that go into it, but we have software that can run all of those numbers and let you know specifically in that case, like, what is the best for you. On the flip side of that, though, you also have an option whenever you're looking at a refinance to add money to it. So maybe you might want to, consolidate debt or, pull some equity out for other things. And if you're looking at it that way, then there's also software that we have that can compare, what rates are you paying on your 25% rate credit card or something, other debts that you have, and we can run those programs to see when that becomes beneficial for you too. So definitely, just want to do it case by case with each mortgage and run the scenarios on it.
That's actually very interesting. Now, let's say most mortgages, people usually do the 30-year mortgage thing, right? Now, I've been paying for the house for like 4 years or whatever amount of time, and then the rates come down. It is beneficial for me now to do it, like you said. And do I have to refinance for another 30 years, or can I do it for the amount of time that is left on that particular loan, something like that?
Yeah. You could definitely go back up to 30 years in most cases, but you also have the option to go lower if you want. And it varies by lender with what the regulations are within that company. For us specifically, we go anywhere from a 15-year to a 30. So 15, 20, 25, 30, you've got those different term options. Typically, the lower term that you get, the lower rate that you get. So, you may have a pretty decent savings to go down to a 15-year mortgage versus a 30-year. And we can also run those numbers and show you exactly what that looks like. You'd probably be pretty shocked to know that the difference between a 15-year and a 30-year may not be that big of a difference in your monthly payment. So we look at those, those numbers to see specifically to what, give you those options, and you can choose what's best for you in that case.
Wow, that's actually all very interesting.
Yeah.
Listen, if you have any questions about this, because this is a quick video, obviously we're not telling you all everything in one video, feel free to put it in the comments and we'll get back to you with an answer, or we might be able to contact you and talk about it. But other than that, Jessica, thank you so much for explaining this for us. And to all of you, thank you for watching, and please subscribe to the channel, follow the channel, do whatever it needs to do, but all right. In the meantime, you all take care of yourselves, and you'll have a great day. Bye.
All right. Thanks. Bye.